Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Some of the pandemic tailwinds that were helping PayPal have clearly subsided, and the company's growth has really slowed as a result. Now, the company's recent earnings report actually caused a massive sell-off in the stock. Shares are actually trading lower than they were 5 years ago. So is this a company that's in trouble, or is this a value stock now? I think this is really a fascinating question for investors, especially as we compare it to some of its competitors like Block, which runs the Square app and Cash App, and Adyen, which is the payment network that a lot of big companies use to process their payments. So I want to dig into PayPal, exactly what the numbers look like, and then what it looks like to competitors to see whether this is a value to buy right now. My name is Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube, and let's look at a couple of charts to show what PayPal's operations really look like. I want to start with this one, which shows the stock price, revenue on a trailing 12-month basis, and then free cash flow on a trailing 12-month basis. You can see that revenue is up really sharply, nearly doubled in the last 5 years. Free cash flow is up about 48% in that period of time. Although it has been a little bit lumpy, there has been steady growth since 2020, but the stock price is actually down a little bit since it was 5 years ago and way down from its peak in 2021. So there's a lot going on here, but I think the big story is that investors just aren't buying the growth story for PayPal. The company made some big projections about how quickly it was going to grow its user base and also its free cash flow, estimating that it could do $10 billion in free cash flow by 2025. It doesn't look like that's going to be the case, probably be well short of that. But even at about $5 billion in free cash flow, this is a relatively good value stock at about 12 times free cash flow. So could the company be a good buy long term? Because we are still seeing high single digit growth. There's a lot of tailwinds behind the digital payment space and some of the company's businesses. Well, let's look at some of the competitors, and in particular, Block and Adyen. I'm going to just show revenue growth here to start with, and this is as far back as these numbers go on Y charts. But you can see that Block and Adyen are both growing much more quickly. I will say with Block, some of that growth is because they do count Bitcoin trading as part of revenue. They're not just counting the commission, they're counting the entire value of each Bitcoin that's traded. So take that growth with a little bit of a grain of salt there. It is sharply lower than that, although more than PayPal over the last 4 or 5 years or so. But Adyen is actually doing extremely well. And like I said, they're providing services to a lot of big merchants who are basically white labeling their services. If you look at free cash flow, this is where I think you see a really interesting difference. Block is basically free cash flow break even. Adyen is generating positive free cash flow, but less than half of the free cash flow of PayPal. So what we're seeing right now is investors are selling off the company that has a cash generating business and preferring companies that have more growth but less cash generation. That's kind of the opposite dynamic of what we would think of in a market like this, but that's exactly what's happening right now with these three companies. I also want to pull this up here. This is operating margin for these three companies. And you can see that, again, PayPal is the leader with about a 16% operating margin. That's one of the criticisms over the last year or so, is that PayPal's margins are on the decline, but they're actually still better than a lot of their competitors. So exactly how should we think about these results? Well, I think right now in the current market that we're in, with rising interest rates, with investors focusing more on profitability, PayPal actually looks really attractive compared to both Adyen and Block. Now, it clearly does not have as much growth. I'm not nearly as excited about their company's products, but a decade from now, I think this is a company that we could see just chugging along, churning out cash year after year, maybe buying back stock, maybe adding some businesses that it acquires over time. But right now, we're pricing this stock as if it's not going to grow at all, but management is still expecting pretty solid growth in the high single digits this year. This is not a no growth company that deserves to trade around 10 times earnings or 10 times free cash flow. This is still a growing company. It's just not growing as much as some of its competitors. But remember that the payments business is actually something that is pretty sticky for businesses. When you build your business around accepting PayPal or accepting Square, it's very hard to switch which payment provider you're using. Same thing with the network effects with something like Venmo. Once you and all your friends start using Venmo, then it's hard to move payment apps. It isn't like it's impossible. These are digital tools. But I think the fact that PayPal is generating such positive margins, so much free cash flow, that's really a sign that it does have a strong business. Now, it's obviously prioritizing that cash flow over growth. And maybe that's something that management can turn around. But I would look at this as a slow and steady company to put in your portfolio. Now that it's trading at a pretty good valuation, I'm much more intrigued by it today than I was a year ago. I have not added shares recently, but this is on my short list now that the stock has come down, especially if we get to a point where it's trading for under 10 times free cash flow. I think that would be a really great valuation for a company like PayPal. Like its former parent, eBay, this is a company that's down but may not be out. I think it's a lot bigger business, a lot more sticky business than a lot of investors are giving it credit for. The shiny growth object may be out there with some of its competitors, but PayPal could be the better long-term stock to hold over the next 5 to 10 years. But what do you think about PayPal and its recent results? Leave those comments in the comments section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.